Let's bring in Michael Sonnenfeld, founder of Tiger 21. And Michael, let's start with today's action. What are you hearing from investors and what are you telling them?
Well, our members have been concerned about markets all year long. In the spring, raised cash all the way to 19%, a historic high, and lowered exposure to the markets. So they're probably taking today in stride, but obviously they're looking closely at the markets.
So they have raised cash to those high levels because I assume they're worried about short-term risk. Are they also worried that eventually the air is going to come out of the balloon? The Fed has pumped a lot of levitating helium into the market.
Yes. Well, our members have one foot on the brake, if you will, increasing cash, but they're also looking over the horizon to where the really long-term stories have a real runway. And they're looking both at artificial intelligence. You were just talking about the climate. It's not just long on all of the solar stocks and ETFs like TAN and LIT, up over 100% this year for TAN, over 50% for LIT. That's a battery ETF. They've been short. A number of members have been short on the fossil fuels. So you get a double whammy there. But on artificial intelligence, that's got a long runway. And you got 7 great stocks, 3 Chinese, Alibaba, Baidu, Tencent, and here in the United States, Amazon, Alphabet, Facebook, and Microsoft. So our members already this year are up over 10%, even with these high cash holdings. The NASDAQ is up like 30%, even after today, maybe in the high 20s as of today. Mm-hmm. So they're really looking for the long stories and how to hold on to it. They're more interested in total return than just a rate of return.
That stock LIT is so lit. All right, let's go to Bitcoin and gold. What are they doing there?
So, look, Bitcoin has had a run. I think this morning it was at 13,000. So it must be up 3-4 times for the year or more. Historically, gold was an instability hedge. I know that our members have increased gold holdings by about 100% this year, but it's still small numbers. Some of that is because of the rise in price and some is because new allocations, but it's still about a 2% allocation. Bitcoin a little less than that, but both are refuges for people who are concerned about all the money that's been pumped in the system and whether the dollar will remain as strong as it has.
Shepard Smith here. Thanks for watching CNBC on YouTube.